Hey everyone. So you're working from home, right? Well, guess what? You're probably sitting on a tax deduction you haven't even thought about maximizing. Today, we're going to break down exactly how to claim your home office expenses so you can get the biggest return possible. Let's dive in.
No, really. That very space you're in right now, whether it's a dedicated spare room or just the corner of your dining room table, that can actually save you some serious cash on your taxes. And we're going to show you exactly how to figure out the numbers. Okay, so when it comes to claiming these expenses, you used to have a choice. There was the detailed method, where you tally up your actual costs, and then there was this temporary flat rate method. But, and this is important, that flat rate thing was just for the 2020 to 2022 tax years. It's gone now. Yeah, the flat rate method was super simple, but since it's off the table, that leaves us with the detailed method. Now, it does mean a little more legwork. You got to get a form from your employer, keep your receipts and all that, but it's the only game in town now, so that's exactly what we're going to master today. All right, step one. Before we do anything else, we have to figure out what slice of your home is actually your workspace. Think of this as the foundation of your entire claim. If we get this part wrong, the whole thing crumbles. So let's get it right. And honestly, it's a pretty simple three-step deal. First, you measure your workspace. If it's a nice square room, great. Just length times width. Easy. Second, you got to measure the total finished area of your home. And yes, you have to include everything. Hallways, bathrooms, the kitchen, all of it. Then you do a little bit of simple division, and bam, you've got your magic number. Let's actually run the numbers so you can see how it works. Say your workspace is 40 square meters, and your entire home's finished area is 400 square meters. Okay, so you just divide 40 by 400, that gives you 0.1, multiply that by 100, and there you have it, 10%. Your workspace percentage is 10%. See? Simple as that. Okay, so you've got your space percentage. That's the first big piece of the puzzle. But the next piece is all about how you use that space. And trust me, this part can totally change the final picture of your claim. So here it is, the big question you have to ask yourself. Is your workspace a common area, or is it a dedicated, designated room? I mean, does it have other purposes, or is it only for your job? Your answer here sends you down one of two very different paths. So, what's a common area? Well, think about your kitchen table, or that desk you squeezed into the corner of the living room. Basically, any spot that turns back into a regular part of the house when you clock out. This is probably the reality for a ton of people working from home. A designated room, on the other hand, is totally different. This is that spare bedroom you converted into an office, or maybe a den that is used for nothing but your job. The key word here is only. No personal use, period. And that distinction is everything. And here's why that distinction is such a big deal. Let's look at these two examples, Sam and Charlie. Sam, he works in a common area, so his claim gets whittled down by his work hours all the way to just 2.8%. But then you have Charlie. He's got a designated room, so he gets to claim the full, straightforward 10% of his home expenses. I mean, wow, the type of room makes a massive difference. Okay, so if you're in that common area boat, you've got one more piece of math to do. You have to figure out what percentage of the time the space is used for work. Let's say you work a standard 40-hour week. You divide that by the total hours in a week, which is 168. That gives you about 23.8%. Then you take your original space percentage and multiply it by this new time percentage. So for Sam, his 12% space claim gets multiplied by 23.8% and poof, it drops all the way down to that 2.8%. All right, so we've nailed down the basics, but life isn't always basic, right? What happens in those trickier situations? Like, what if you share your home with another person who also works from home? Or what if you moved houses during the year? Let's get into those special cases right now. This is a huge one, right? So many households now have 2 or more people working remotely. So how does that work? Well, the rules change a bit depending on whether you're both sharing the exact same space or working in different rooms. Let's go back to our friend Sam. Now, say he shares the dining room with Terry. First thing they do is split that space percentage right down the middle. So they each start with 6%. But because it's a common area, they each have to do that hours worked calculation for themselves. Sam worked more, so his final claim percentage is 1.4. Terry worked fewer hours, so his is 0.9. See? Each person calculates their own piece of the pie. But check this out.
what if you share a designated office? Oh, it gets so much easier. Take Nika and Sergio. They just split the space percentage. Their office is 12% of the home, so they each get 6%. Done. Because it's a designated room, you don't have to worry about that whole hours worked calculation. Way simpler.
Okay, another one I hear a lot. What if you moved? You packed up and changed addresses during the tax year. What do you do then? Well, the rule is actually pretty straightforward. You just have to do a separate calculation for each house you worked from. Let's follow Jean-Francois to see how it works.
So Jean-Francois was working from home at property A, say, from April all the way to the end of June. Then he moves, and he starts working at property B for a couple weeks in July. For his taxes, he basically has to pretend these are two different jobs. He does one full calculation for property A, all the expenses, the space percentage, everything for that time period. Then he does a second, totally separate calculation for property B.
And once you have those two separate claim amounts, the last step is the easiest part. You just add them together. The number for property A plus the number for property B, and that's your grand total for your home office deduction for the year.
Okay, let's just boil this all down to the key takeaways. Step 1, calculate your space percentage. That's your foundation. Step 2, and this is the big one, figure out if your space is common or designated. Step 3, only, and I mean only, do that extra hours worked calculation if you're in a common area. And finally, step 4, if you share the space, remember to split the claim fairly.
So there you have it. We've gone through the space calculation, the use calculation, and even those tricky special scenarios. Look, the detailed method does take a little bit of effort, I won't lie, but getting it right can seriously pay off with a nice tax deduction. So now that you know the rules, the only question is, what's your calculation going to reveal?